Hi. So today I'm going to talk about a job description I came across. It's related to a position, a quant position at a hedge fund in Switzerland. So I thought of making a video about what are the skills needed in order to work as a quant at a hedge fund, right? Those who do not know what a hedge fund is, it's more like a mutual fund, but it's mutual fund for high net worth individuals, rich people. you know so unlike mutual funds that do not take too much of risk, hedge funds do take substantially higher risk in order to gain substantially higher return. They do not necessarily achieve that all the times. In fact, there are many examples of hedge funds closing down, hedge funds going bust because of high risk. But that's the intent, right? And that's the reason why hedge funds don't take money from retail investor, normal investor, people like me and you. They actually take money from high net worth individuals, people who have made money through other means, mostly the entrepreneurs, from family offices, institutional investor as well, some institutional investors. And they do not just invest in stocks. They have investment in other assets also, including derivatives. And they even take leverage position, which is to say that they borrow money in order to take position in the market, right? So the strategy they come up with is quite risky. Okay, so in order to work there, right, so what kind of qualification you need? And as you may know, right, if you work for high net worth individuals, the remuneration could be very, very high. It's a high risk industry also. That means you could lose the job, but the remuneration could be very, very high. But also, it's very important to understand that hedge funds are not like the trading firms, the HFT firms, where the HFT firms are more into finding arbitrage opportunities, finding short-term opportunity in the market, some inefficiency, short-term correction that is about to happen, taking that advantage, and making money out of it. But whereas hedge funds, in most cases, of course there are exceptions, would go, on a more longer term investment. That means there's no hurry to sort of allocate capital, unlike the high frequency trading firms, where the allocation of capital happens at a very quick time, right? You spot an opportunity, you allocate the capital. That's not how it goes in most hedge funds, right? You do research, you present to your people, there will be debates, and so it could take quite some time before you allocate capital. Right? So in order to work there, right, what kind of qualification, what kind of skills that you need to have, right? So let me discuss. This is one job description I came across. It's the job is based out of Switzerland, but you could apply from any place. That's what it says. All right, so this is one position where you are not going to be making sort of investment decision, but you will be helping the investment manager taking better decision. That means you are more of you're not the front office guy. You're not going to be taking that final call, right, where to allocate the capital, but you will be helping the investment manager, and the investment manager will rely on your insight. So you'll be playing with the data, you will be building models, getting insights from the data, and recommending your trading or investment strategy to the investment manager, and then the investment manager would then decide whether to go ahead with that or not. So you don't make the final call, but you play a very vital role in selecting which assets to invest in, right? So you play that role, right? And it's a hedge fund that uses various types of strategy, such as whether it's fundamental strategy, systematic based strategy, macro based strategy, event based, news based strategy, and so on and so forth. Nothing fancy. This may sound a bit fancy, but if you read a bit online, you have so many basics already there on the internet about what these strategy are, and you don't use much of sophisticated mathematical technique for these things actually. And that's one beauty of working as a quant in many trading firms, that you don't really use the kind of mathematics people use on the sell side. For example, those who work on the derivative pricing and those places, as long as if you're familiar with regression techniques and time series techniques, I think that should be enough in order to work in this field. Okay, you need to have a quantitative background. That's what it says. You need to have education in computer science, mathematics, physics, statistics, engineering, quantitative finance. Surprisingly, economics is not there in the list, but I think economics is also considered a quantitative subject. So if you have a degree in economics also, I think I'm sure they will, and they won't have problem. What are the technical skills you must have, right? So what they're saying is that you need to be good in Python, and you need to have a good understanding of the data science packages such as pandas and numpy and scikit-learn and scipy, and you must be comfortable with relational database. Well, that goes without saying. You must be good with SQL. You must have good understanding of relational database, and you must have worked with some cloud technology. You must have some understanding of data visualization and so on and so forth. You should have used some some industry factor industry models, industry investment models. But I think they're flexible with this, that they're saying that if you know, then it should be a plus. It's not a prerequisite. If you have knowledge of some of the factor risk models from Bloomberg or Bara or Axioma, then it's nice to have. Good communication skills, it's a prerequisite. You need to be good with writing documents. That's with most of the quant finance profile. You'll see that you need to be able to write good documents, because of course if you write differently, if it's not misunderstood, then it can prove very costly for the organization. So that's quite important. Okay, so what is the job profile like, right? So it's about, again, as I've said, it's not about sort of taking investment decision yourself. It's about helping the investment committee taking better decisions. So you'll be presenting your work to the investment committee, and the investment committee will decide whether to go ahead with your investment strategy or not, right? It's also about sort of a lot of data handling, recollecting data, cleaning data, and coming up with insights from the data. And there's nothing specific about whether you know any quantitative finance model or not. In many places, right, you will see that okay, there are some very industry specific quant finance model you are supposed to have knowledge in order to work there, right? But this is not the case. That's one unique thing about many of these trading firms or the private funds. When they hire quants, they don't necessarily need you to be an expert in quant finance. As long as you have understanding of some statistical modeling and some programming knowledge, and you're a curious guy, you're a smart guy, right? They don't really care much about how much finance you know. I mean, you must have interest in finance actually, right? If you have knowledge in finance, that will prove that you have interest in finance, because a lot of time people struggle to know if the guy who is going to come and work with you has interest in finance or not, right? So if you can prove that, and if you can just tell them that, look, I have some modeling knowledge, some machine learning modeling knowledge, some regression statistic type modeling knowledge, I know hypothesis testing, I know time series forecasting using ARIMA or ARCH, GARCH, ECM models. If you have done any econometric modeling, financial econometric modeling, if you have done any project in finance, I think that should be enough. I mean, people are not very particular about what project you have done or what technique you know. You must have done something, right? That just to prove that okay, you have interest in this field and you have some aptitude. the learning that you will do will be on the job, and it's more exploratory, it's more research type job. That means there's nothing that you learn and you just reproduce the work, none of that. You have to be very curious and very, you have to be extremely curious person in order to succeed in such a role, right? So yeah, and a lot of this question that you will be asked in such places will be open ended. That means no, people won't ask you about direct question related to derivative pricing or whether you understand this interest rate model or not. Nobody will ask those questions. You'll be asked questions related to probability or maybe some linear algebra. People may ask you about your graduation project, what you've done, whether you have written code or not. They will probably ask some question related to coding. They will ask questions mostly about statistics, some machine learning, time series modeling from econometrics, and regression analysis, right? As long as you're familiar with all of these, I think, and if you can prove them that you're a smart guy, you are quite interested, I think then they might consider you. There's simply not too many jobs in these sort of firms, so they're very particular who they hire. The remuneration, as I've said, is quite impressive, and you don't get these jobs everywhere on the planet. But these companies are willing to hire from anywhere as long as they find someone really smart and someone really useful. There are people from India, from China, Hong Kong, Singapore moving to Europe, working in such places. I've seen many. So yeah, give it a try. If it and yes, if you prepare for such roles, you could also be considered for other roles, right? For example, many mutual funds even are hiring quants now these days, right? And the interview pattern probably will be very similar, right? So just wanted to share with you. If you have questions, yeah, as always, let me know in the comment section. And thanks for watching. See you next time, guys.